just going to ask you in the beginning to introduce yourself and maybe tell us your background.
I'm Rob Nance. I'm the co-founder and managing partner of CityBlock Capital. We're a tokenized venture capital fund. So we've taken a venture capital fund that focuses on security token infrastructure, and we built it on top of the blockchain to provide liquidity to investors. Before that, I was running a traditional venture fund, and I was in banking before that.
So my name is Mike. I'm the co-founder of Elementus. And so, as you saw before, we try to do data analytics on blockchain data. And since we are a centralized company that is selling the services, we are considering to raise equity through a security token offering, basically. So doing the classic financial instrument through a tokenized way, basically.
My name is Kristjan. I live in Iceland. Even though I'm super bullish on security tokens, I guess I'll just be the one person on the panel that's advocating for utility tokens. I run marketing for Svandis, which is an Icelandic, well, Estonian ICO focusing on visualization and research for traders and investors, but I have pretty deep knowledge of security tokens.
Cool. So maybe in the beginning, Rob, could you introduce us to the topic of security tokens and how you can see them in both maybe in a layman's terms and also more detailed version of what you think about this space?
Sure. So when I look at the blockchain ecosystem, I kind of see a three-legged stool, three parts to that. So the first would be payment tokens. So that's Bitcoin, Ethereum. The second would be utility tokens. So that's any token that's used within a payment ecosystem. So I think of like EOS, or I think of Filecoin or something like that. And the third is the area that I focus exclusively, which is security tokens. And so that's taking any real-world asset that exists. That could be real estate, it could be a venture capital fund, and taking it from its current ownership form, which is usually paper, and making it digital. So today there's about $700 trillion worth of assets worldwide that are recorded by paper. And when I found that out, it kind of blew my mind, because I said, it's 2018, why is everything on paper? And why, to transact, is it all done on paper? And the opportunity that exists using blockchain technology is to move that to digital ownership. Well, why is that important? It's important for a couple of reasons. It's important first because it gives people access to the assets that have never had it before. So today, if you want to buy Class A real estate in New York City, you have to either be part of a REIT, right, which has a really high expense profile, or you have to have money to buy an entire building. But what if we could take that building and build it on top of Ethereum and divide it into thousands and thousands of tokens that anyone could buy worldwide? Well, suddenly someone with $1,000 in South Africa or Ukraine or anywhere around the world could have access to that asset. And so what it really represents is not a revolution. It's not building a new financial system, but it's taking the current financial system that exists and significantly updating it. And it's providing accessibility to more people. It's providing transparency to more people. And it's also helping institutions manage their assets better. So today, for example, if you own a share of stock, so if you're in the US and you work with a brokerage firm, so it could be Schwab, it could be E-Trade, it could be a number of firms that have online brokerages, you don't actually own your stock. So if you buy a share of Apple, you don't own it. It's in the name of what's called a DTCC. Well, why is that interesting? Well, it's interesting because if you don't own it, you have to sell it back to them. Sell it. You can't actually sell it to someone else. So what's interesting about digitizing all assets is suddenly you would be able to take your share of Apple stock and go to a coffee shop and sell it to somebody else in a peer-to-peer fashion. So there's a lot of elements that we've seen that have been created because of Bitcoin, because of Ethereum, because of other payment tokens that will allow for these assets to be transacted peer-to-peer, which will be big because there's a lot of countries, a lot of emerging markets where they don't have access to the infrastructure that exists in countries like Iceland and the US.
Cool, thank you. Maybe to ask Chris and Mike, you have been looking into ways to raise money in this current market. And what is the proposition for you when you think about security tokens over utility tokens or classical VC raising? Like, what's your perspective on that?
So basically with Elementus, we started to consider a utility token offering. And the utility token we had in mind was basically a prepaid token that gives you rights to the access to services we would sell for life at a specific discount. And so the idea was to find a way to basically get money out of an investment and offering something that is useful for the people who are going to use the product. Now the tricky part is when you start to do that, you suddenly have another layer of risk on top of your business because you introduce an unknown factor, which is how people are going to behave with this utility token that they have never used before. Are you going to reduce the scope of your business and so on? And so after a lot of discussions with investors and users of the product, we discovered that actually what would make more sense in the first step of our product is to raise equity and to tokenize it because we believe in tokenized financial instruments that provide liquidity. As you said, so that everyone could invest and so that you could have a much easier access to exit a company or go in a company. Now, what's interesting is that in our case, for Elementus, the long-term vision would be to decentralize the product and the database. And so somehow you would need also a token to incentivize people to actually run this decentralized database. But the first step is to start centralized. And so you start with a security token. And then most likely you would end up with another utility token to incentivize the ecosystem.
So I'll do it from the VC angle after suffering for years in the startup space. So who here works for an Icelandic company? Raise your hand, like legitimately, let's get, okay. Who here has been a part of an Icelandic company that's fundraised? Raise your hand. Okay, who here has successfully fundraised in Iceland? Raise your hand, right. Who here has tried to fundraise outside of Iceland? Who here has successfully, don't raise your hand anymore. Who here has successfully fundraised and secured funding outside of Iceland? Right, that's what I'm talking about. So I have spent a number of years in the startup space and last 5 years in the Icelandic VC-backed space fundraising. Worked with a lot of angel investors, worked with, basically the 2 or 3 VC funds that exist. And it's really a struggle to get their attention. It's a struggle to get their positive attention more than just citizenship where they're just meeting us just because we're in the community. But it's not really going to go anywhere, right? Why are we, as a startup, kind of forced our hands to kind of reach out to just select wealth providers? And so that's been an issue, right? So, we hear this too often. Being an Icelandic company, for an Icelandic VC to invest in us, they want to see traction outside of Iceland. That's great. Okay, give us money and we'll show you that. Like, we have traction in Iceland. We need funding so that we can actually take our product and market it and localize it to a certain market. Please, like, this would be fantastic. Okay, but show us some traction outside first, and then we'll do that. So it's a chicken and egg thing, right? And then we'll say, like, well, why don't you go meet with some investors? We'll connect you with some investors in the valley, which is a waste of time if you're an Icelandic company. Or you'll go to Oslo or somewhere in Berlin or wherever, and they'll go and be like, great, have you hit 50,000 MRR? Well, no, we haven't. I mean, it's Iceland. What do you think? They're like, well, come back to us at 50,000 MRR. Then what happens? 6 months, 300,000 in salary, and it goes under, right? Tokenizing your equity and opening it up to a global liquidity market is really kind of the answer. I mean, the whole thing about, I know Einar mentioned it, tokenize the world is the saying that's mentioned often. I think Iceland, because we're waterlocked, but then we're also just geographically locked because of capital. Even though there's no capital restrictions currently, there's a capital restriction that's always going to be placed over us, right? We can't just build another app that's going to be a unicorn and that's going to get the attention of the 2 or 3 VCs here. That's bullshit, right? So the idea behind security tokens is offering up your equity through a security token offering on a global liquid pool so that someone in Nigeria, someone in the US can actually invest in you for fractional ownership.
So, okay, all 3 of you talk about, removing gatekeepers, essentially, or reducing the step for the individual to invest. What is the landscape now? What is the infrastructure, and where are we in this, wave that is apparently taking over the world?
So I think we've at CityBlock spent the past year working on building a security token offering, and it's really, really difficult right now, especially inside the U.S. because of regulatory restrictions. We've successfully gotten over that restriction, but what we've seen is pretty phenomenal, which is we're able to globally source liquidity from anywhere in the world. And I know that sounds weird, but as someone that has run a traditional venture fund, you want as few investors as possible with the biggest checks. And now we kind of want the inverse, which is as many investors as possible with small check sizes. And so what we have so far, and we launched 2 weeks ago, is 500 people from 34 countries around the world have sent us Bitcoin, Ethereum, or US dollar. And that's pretty amazing if you think about it. People that I've never talked to, that I've never met, said, yes, I like your investment thesis, I like how you're investing. And so this comes back kind of full circle to your question, which is, what's out there? The opportunity that exists today is building the infrastructure on which security tokens will be traded. So, we have NASDAQ, we have the New York Stock Exchange, which are not set up to trade digital assets. And today there's a number of companies, the T0s of the world, Harbor, which is an issuance platform, that are building this infrastructure to trade. There are companies that are either raising token offerings or raising traditional equity. And the opportunity we saw to work with and help, frankly, crypto investors is there's a lot of crypto investors out there that can't write $1 million, $2 million checks. That's the minimum size for these companies. And so by starting a fund that focuses on this, crypto investors can then go and now access this infrastructure that's being built. And we think that over the next 2 to 3 years, infrastructure, much like infrastructure that was built on the internet in the early 90s, is being built for this ecosystem as all these assets come online.
Yeah, and to come back to what you were saying, I think there's two sides, right, of the puzzle. The first one is the supply. How do you set up the infrastructure to offer to people the security tokens? But the second one is the demand as well. And what we discovered for the last 2 months is by talking to broker-dealers, people that are licensed in the US to actually bring your product to investors, that the demand for security token is actually not that high for now. Why? Because people are not used to that. Either they are from the traditional financial world, and they just don't understand crypto and are not comfortable to invest, or they come from the ICO space, where it's all speculative and you have immediate liquidity and you can flip it. And so right now we are in this middle ground with the security token offering, and we need to educate people to understand that actually a security token offering is a traditional investment tool. It's just tokenized, but that's it. It's exactly what you use to invest. And for the people who used to invest in ICOs, well, basically stop investing in speculative tool and invest in a real company. You're trying to reach, to sell something to users and really have real adoption. And as we were discussing with Chris, you have a lot of project or blockchain right now outside that are promoting and doing a lot of marketing and so on, but there is no users or no paying users. And so yes, you raise money, yes, you have a market cap for your token, but no one is using it. And so it's definitely not a good way to access a product. And so with equity, that changes a lot, because the value of equity is linked to the cash flow of the company. And so that changes. You cannot speculate as much, because if you know the cash flow of the company, you can estimate the equity. The link is very direct. So that's why I have very hope with the security token aspect, because the demand will come, because the gap in knowledge is not that big compared to ICOs. And second, you invest in something that is quite real.
I mean, you guys just literally said everything there needs to be said. So the whole discussion around product or utility token versus security token versus a payment token, I don't think product tokens are going to go away. Utility tokens are going to go away in any capacity in terms of like ICOs or token sales. I mean, ICOs, we're not supposed to really say that. I just think that it's time. Like if you're really thinking about starting a blockchain company or a company that's using blockchain. Okay, step back. If you're thinking about using or starting a company and you want to do a token sale, please, for the love of God, use the blockchain in your product, right? Don't just try to raise equity, call it a product token, and then hope to God you raise your $10 million. Please leverage the blockchain, because those days of not leveraging the blockchain but still saying that you're using blockchain when you're really just a startup and you just happen to have this thing on the side that holds money, kind of, but not really, is hopefully going to be done, right, and be replaced by security tokens. And I think too many people are, I'm kind of digressing from the point, but they've already addressed it, so I'll digress, is that us in blockchain really need to understand that there is a place for every single asset, right? So if you're like at Svandis, for instance, I mean, the Svandis token is required to actually use the platform, right? So when we work with trading groups, ICO groups, they have to buy Svandis tokens in order to use the platform, right? So we can accept fiat, we can accept cryptocurrency as payment for that Svandis token, but Svandis token is required, right? So there's a tool for that. We made a clear decision not to go in the security token route for many reasons, and that just has to do with how we're collecting data and the fact that we're going to have thousands of users engaged in data collection and data mining for us. So there was a clear decision for us. While in the case of Mike's, I mean, the security token just makes a lot of sense, right? And the whole thing about utility versus security, we're not talking about whether or not Ethereum after its initial offering is a security or a utility. We're talking about whether or not you're offering up equity versus you're actually using a token and the whole mechanics of your platform. So I think it's important to just really sit down and be honest with yourself, honest with your founders, because the regulation for going forward with a security token are actually much clearer than everything else. I mean, if you're investing in Bitcoin, that's pretty clear. It's a digital asset for the most part in many countries if you're allowed to. But product tokens are super loose. Like, so if you're kind of on the edge, you don't really know how a token fits into that, then do your homework on security tokens and see the right angles to go with, because security law is pretty damn strong and not new in the slightest.
I'd just like to comment on this because we've been through this journey of trying to, basically sell a utility token. And we've discovered that actually it's much easier, much clearer to understand what you need to do in the US if you want to do that than in any other countries in the world, like Switzerland. Everyone says that, Switzerland is a great country, but it's actually not true in terms of, regulations, because there is this gray zone of utility token. And if it's sold as an investment, then it becomes a security. But they have an unregulated security category. And so basically what you need to do is to ask the equivalent of the SEC in Switzerland to tell you what you are. Otherwise you cannot know that. So it's really hard to just be able to sell something that you think is legit as a USD token, because you have to face such regulation steps that is really heavy and costly in terms of lawyers and in terms of time. Now there is one topic that I really like, and I think I'm quite bullish for the future on this, is an ecosystem where you have dual tokens. So a security token that gives you a right to get, dividends per month or per quarter, a month, whatever, based on the transaction which is in the network. And then you would have also a utility token involved in the ecosystem that would incentivize people to behave in a specific way, the way they use the network. And so I think it's like not just, it's only SEO, or it's only utility token. There is a world where you're going to have both, basically, and trying to get the best out of both.
So we've talked a lot about fundraising. What is in it for the investor? Like, how is this different? Because when regular people go and invest, or maybe some people who do that for a living, they interact with a broker through a computer, and everything else is just in the background. Like, how is this process different for me? And like, how big is this for retail investors who have not had access to this before? Like, all of these buildings and everything you said earlier.
So I think, again, it depends on the jurisdiction where you are in the offering. In the U.S., it's pretty clear, right? All utility tokens are securities, right? But not all security tokens are utility tokens. I think I got that right. And so what's interesting is by registering as a security, it's very clear what has to be done. The KYC, AML that has to be done. It's very similar to how someone would have bought an exempt security before, exempt being it's a private placement offering, except that it's done digitally now, which makes it better. I think one thing I wanted to add from before that ties to this. Sorry. I lost my train of thought. Anyway, I think what's interesting when you look at this from a fundraising perspective, that's actually helpful. If you remember, Facebook and Twitter banned ads for ICOs. They don't allow that anymore. But if you're a security offering, there's no rule against advertising your security on there, even if it is also a utility token. So that's something to think about as you're going through this offering. If you're trying to get reach and go out there, like we can advertise on Facebook We're not, but if we wanted to, we could advertise on Twitter if we wanted to, and we can do that because we're selling a security. We're not just selling an ICO.
Yeah, and that's something that, when we start to do an ICO, people don't understand, and it takes a while to talk to lawyers to get the conclusion you just said. So basically what he told you is something that would spare you 2 months if you want to do an ICO, and a lot of dollars. I'll say that from investor perspective, what's very interesting is that when you invest in equity, usually the big problem for investors is to exit the company at some point where they think that they take some risk and now it's time to get the reward. And maybe another investor will step in and take more risk for the future. So for example, we're talking about Chris about tech and life science, and usually it takes 10 years for a company to exit or more. So if you're an investor, your investment is locked up for 10 years, even though you made a lot of money actually theoretically, but you didn't cash out. Now with security token offering, you can have access to a liquid market, a market where, from the US point of view, you have 1 year where you need to hold the token, but after 1 year you can start to sell it to someone else, and so to a secondary market. And then it becomes much more easy to, as an investor, decrease your risk and be able to get the reward from the risk you've taken in the past much faster. And so, as you said yesterday, actually, you end up in a world where everyone is trying to pitch everything and trying to sell everything and buy everything simply because you can. And it's very instantaneous. The only thing that you need in this world is just a mobile. That's it. It's quite insane. So for investors, it's very interesting for that purpose.
So from the perspective of an accredited investor, I won't really comment on that too much. Rob's here, you should talk to him. He's much more knowledgeable in that. I'll just say something wrong. But from the vantage point of being a non-accredited investor, I think, which is, I'm going to go on a whim here and say basically everybody here, for the most part, in the eyes of the SEC, right? So security laws, it's old, there are a lot of reasons for it, lack of education, speculation, making sure that people are making the proper investment decisions, something that's not a risk or a snake oil or a Ponzi scheme or whatever. And basically the idea behind being an accredited investor is that you show proof to your work, you have enough wealth, there's some education involved. Rob can talk to this more and clarify if I'm saying the right things. But basically the idea is, as someone that lives abroad, the idea is if I weren't an American and I weren't an accredited investor, I was an Icelandic citizen, I could actually invest in an Icelandic or in an American company, right? That was doing a security token offering. That's pretty powerful. So if you think about it from that perspective of really opening up your investment opportunities to investing in a VC, investing in a fund, investing in a company, investing in a coffee shop that you visited in Portland while you're just on vacation with some friends that just happened to be fundraising through an STO. That's pretty powerful considering you're basically going outside the purview of a typical asset manager like a bank and actually just kind of putting it in your own hands and investing. Be like, wow, I met these people and they're just super passionate about coffee. This seems like the community loves them. I would have never have known about this and they really need to raise money. Well, where are they going to raise money? They're going to raise money locally. They're going to go to a bank, try to get a loan. Are they going to be knocking on doors of funds? Probably not. They don't understand that. But if they go through some type of security token offering and through the future of these security token exchanges, they'll have an option to actually raise money from everyone all over the world. And so, case in point, if you're starting your own company, it's kind of the reverse of that, right? So you're really opening up the liquidity and unlocking the 2/3 of the assets or economic value that's not actually tied up into currency, cash.
Yeah, I'll just add to that. I think it's pretty powerful that citizens not of the United States are going to be able to invest in a lot more opportunities than citizens of the United States are going to be able to invest in, and that's where a lot of the token offerings are going to come from. And so I think that's powerful. On the flip side, there are a lot of accredited investors in the US who will be able to invest in Icelandic security token offerings, which, by the way, can be a utility token, right? It's just the legal structure in which you raise it. So it's something really important to consider, whether you're opening a coffee shop here or you're starting a utility token. The ability to fundraise internationally has now been created, and Bitcoin and Ethereum are what created that and gave people the knowledge. I mean, 3/4 of our investors have come from Japan, and I've never been to Japan, and we've never marketed in Japan. But one influencer on Twitter wrote about our offering, and people have been sending us money from Japan. So it's really powerful. You can now get the attention of the world with social media and use that to raise money for something that's local. It's pretty powerful.
Okay, great. We have covered, a lot of perspectives from this. I'm going to open this up to the audience. If the audience has any questions that you would like to ask. Gisli?
Okay, you've been talking about, for example, the ICOs and how you create ICOs, for example. We are coming from, the traditional IPO scenario where you go through a lot of process around how you give information to the company so that all the investors stand on equal ground. And it would actually be interesting to get all your perspective on that. How is that going to be kind of, regulated going forward? Is it going to be a government body, and the government body seems to be kind of moving relatively slow, to say the least? If you're taking on investors from all over the world, or is it going to be like Yelp for investors? I have 5 stars on investor Yelp, or something like that. How do you think that's going to kind of play out?
So maybe the question is basically, how is the legal landscape going to look? Is it going to be a government body, or is it going to be a private entity that manages the Yelp of investors?
Or the social kind of community?
Yeah. So I hope it's the community, right? I don't think the government, at least in the United States, is very personal not to rate anybody, unless they do something wrong and then they ban them from trading securities. I hope that somebody comes out and finds a way to rate offerings. I think that would be fantastic if the private market did it. Right now, from a legal and regulatory framework, when we issue a security, we have a private placement memorandum, which is a lot like a white paper with a bunch of language that if you can't sleep at night, you can read, and you'll go to sleep very, very quickly about disclosures. And then, there's a subscription document that people sign. That's kind of the standard for a private offering right now. But as far as rating it, there is no way. But if you want to start that business, I think that'd be amazing.
To come back here to your point, which is, in ICO, people inflate and can lie and try to hide what has been really invested and so on. That's definitely one of the problems. You need transparency. You need to understand, to have access equally to all the information possible as an investor. And that's why in the US, the regulatory is so constraining. It's because to make sure that investors have all the information they need to invest. So what's interesting is that blockchain data is something that you look into after investment or during the fundraising process, if you are in the utility token sphere. But if you are in the security token sphere, you're not actually allowed to trade the token if you're in the US for 1 year at the beginning of the issuing. So which means that all of those scams I showed you before are actually not supposed to happen with a security token offering, except if you are in a country where the citizen can actually trade wherever they want, but usually it's not the case. So then, from a legal point of view, what you need to do is make sure that you comply to actually the law from the citizen who invests as well. It's not only the country from where you are issuing the token that matters, but also the citizenship of the people you sell to. And so, for example, in Netherlands, if you want to be regulated, if you are regulated by the equivalent of the SEC in Netherlands, it's because you would sell to more than 150 Dutch people. And so there is some kind of threshold, there is local rules, and so you need to be aware of those when you try to sell security token across the world, because you can end up into those regulations because they would try to protect the investors for transparency purpose. So you have to go both from showing as many information as possible to the world, just to be equally transparent with everyone, but also you need to comply locally with the rules, and that's the toughest point.
So I spent some time in health insurance business. It's kind of my background years ago. And there's a term that's kind of thrown around a lot. It's just asymmetric information, right? So it's the fact that the insurance company knows more about the consumer themselves than the consumer knows about themselves. It's an odd world, but it's also the same with the health insurance company knows more about the patient than the doctors do, and all over the place. But asymmetric information is just absolutely It's really the Achilles heel to any type of investment. I mean, just planning in general, developing a company, whatever it is. And so from the aspect of, we see this in the ICO world of someone trying to build some type of, ICO drops, ICO bench, whatever it is, to rate ICOs. It's super subjective. We're trying to fight this as Svandis, but it's really kind of prevailing, and there's not a lot of viable options around this. But in the security token space, I would say like outside of we see this with IPOs, right? We see this with public companies. There's the annual reports just look like fluff, right? You can't really glean much from this. You don't really know what if the company's performing well. You don't really know until after something happens, or Elon Musk just decides to tweet about taking Tesla public or private. Like stuff like that. Obviously, that was illegal. He shouldn't have done that. But he's Elon Musk. He can go to the freaking Mars. He can tweet anything he wants. But from the vantage point of asymmetric information, right? I think that the one thing that the crypto community has been pretty damn good about, and that is basically holding a 24-hour, 365-day a year shareholders meeting. And I think people that are going to participate in security token offerings are going to be those, and they're from traditional finance, but they're also going to be coming from the crypto world, probably heavily more crypto. Probably Rob's experience. So from where I glean from that is the traditional mechanisms of approaching these companies via email, investor relations at Comcast.net. It's not really. They're going to look for your Telegram button and go to your Telegram and then just feed you crap until you answer it. Right? And if someone hasn't answered it properly, it's on Reddit and Twitter in a matter of seconds, right? And that'll affect your pricing. That'll affect your how much your company is valued at. It's just gonna wreak havoc, and that's not really something that exists so much. I'm not sure if anybody's even tried to do like email and investor relations. If they've owned stock in any capacity, it's pretty much impossible. They don't have to answer you back. All they have to do is send you annual reports and offer you a link to a shareholders meeting. But for the most part, that's kind of the idea is that the community is hopefully going to continue to drive this. It just depends on how quickly the security token offering, the security token landscape really takes off. If we see it more of the traditional crypto community just leaves it behind and lets traditional finance just take a hold of it. I'm hoping it's going to be some balance in between, because I think there's some stability that traditional finance will give, because they tend to make irrational decisions. But yeah, so good question.
So maybe one more question from the audience, Brian?
Yeah, if security tokens and other assets become liquid, so you walk into a coffee shop and buy coffee with them, does that completely throw out all the rules about valuation?
So does buying with securities throw off all the valuations?
So in other words, if you can walk into a coffee shop with your Apple stock and buy coffee, does that completely change how you value Apple stock?
So I don't think that'll happen. Right. I don't think people will use securities to purchase goods and services. I think there'll be payment mechanisms for that. I think that people may use it to transact between individuals, sell stock directly to someone else that wants to buy it. But I don't envision a day in the next 20 years where people are actually using securities to purchase goods and services.
I like your question, and I actually ended up on Twitter on someone who was claiming this theory, actually, where basically with blockchain you ended up with a world, and I don't know if the word exists in English, which is truck. Does it make sense? T-R-O-C? Is it an English word? Yeah. So you end up with a world where everyone is trucking actually assets, and there is no more conception of cryptocurrency or a mean of payment. And he was arguing that actually in the past we were having a debt system and not a truck system. Because when we would actually trade something for gold, for example, the gold would just be the proof that someone owes you something. And so it's a debt concept. And so with crypto, with those liquidized assets, it's definitely a truck system. So technically, if you imagine that there is no scalability issue, that you can transact instantly to anyone, whatever the device you have, it could be feasible. And so it's just a mindset or a paradigm shift. That's why I guess we're saying that it's not going to happen, because people don't have this mindset. But technically speaking, it can happen.
So I agree, of course. I don't think it's going to happen. I think we've talked about this a little bit. I don't think it's going to happen, but it's actually happening. If you think about it, you're going and you're raising an ICO, or through an ICO via an ICO, and there's actually a mechanism involved for your token to be used in your system. Is that technically not trading with the security, or buying with the security, I should say? But at the end of the day, I think like once the regulations are in place, that's not going to happen. But I think that's like the limit of liquidity. Like it's never going to get that far. Yeah.
One small comment, because I just thought about something that could be interesting here. The thing is, why do you trust dollars, or why do you trust Bitcoin when you trust? Whatever, everyone. So if you trust dollars or if you trust Bitcoin or whatever, it's because you know that there is a demand for that once you have it. So you know that you can actually get rid of it to buy your goods. Now, if you own equity, what's the demand for the Apple stock? And maybe the people you're going to meet are not going to accept Apple stock. They don't believe in it. And so you're taking a risk that what you own will not be traded. So when you accept Apple stock equity, you take a risk that you cannot get rid of it when you want. And so that could be also a barrier for that.
So maybe just to wrap this up, to Europe, what can Iceland do to move faster in this space? And I know you went to the stock exchange and talked to some people there. Like, what can we do to improve and be more friendly to the STO market?
Yeah, I think Bitcoin. I think Iceland's been very friendly to cryptocurrencies and has been a leader in things like mining. I think that when you can take an exchange like NASDAQ Iceland that has a lot less volume than NASDAQ in other countries around the world, and start building that on the blockchain to prove that those transactions have been completed that way, and as technology improves and scaling improves, to expand that to the rest of the world, I think that's a huge gift to the rest of the world, and I think that it makes the world a much better place. So I would say that the focus on how do we build our asset infrastructure on blockchain would be revolutionary.
I think that's some good words to wrap it up. Thank you, Rob, Mike, and Chris for being on the panel. Thank you all for coming here.